It's the morning drive. This morning, gold's been trading in Dubai at about 515 dirhams a gram. A spot ounce is something like, depending on the time, it's 4,364, 65, 67. It's around there. Jeff Rhodes is here to discuss this ongoing rally in gold. He's the CEO of Goldstrom Advisory. Jeff, nice to see you again.
Yeah, good morning. Yeah, keep going up, Tim.
I know. I kind of don't know when to stop, and I feel like gold.
It's not stopping.
It isn't, is it? Historic highs again. Take Wednesday morning, 9:10 UAE time. I looked, $4,188 an ounce. Yesterday morning, spot gold trading north of $4,235 an ounce. I'm not being pedantic about the accuracy here because it's just going north anyway. So what's the point? And then obviously today spot prices of 43678.
4380 is the new all-time high. Yeah.
So one of gold's most stable bull runs in years continues. Record highs for the 3 days, Wednesday, Thursday, Friday this week. Over the past month, gold has surged over 15%, shallow pullbacks, less than 2%. So the essence of this is, Jeff, am I reading this right? Everybody wants gold.
Well, not everybody wants gold, but
if you're an investor, institutional, retail,
this
you're
is
interested.
the big difference. The big difference today is the big boys are in.
Yeah, okay.
Really, they are. And I think if we go back over the last 3 years, 2 of those 3 years, central banks were the key buyer. Central banks, and that was part of a dollar diversification exercise, if you like, by non-Western banks.
Sure.
Probably just being conservative and moving some of the dollars into gold. So that definitely has been going on from central banks. The thing that was missing was the funds. That until June of this year, if you looked at ETF inflows, exchange traded fund inflows, they were not really changing. There was no real big money coming in. It was central banks and others, but really what we've had since the summer, and certainly since the end of August, is a combination of central banks, and when central banks buy, it stays bought.
Yep.
And also funds, the big, money funds, the big commodity funds have been coming into gold like you've never seen anything like it before. Well, once again, Tim, that kind of flow is not temporary. It's coming in and it's staying in. And so we definitely had a sea change over the summer where long-term holders have come in and they're buying, and there's no prospect of them selling at any time soon. And I can't see a top. I really, and it's foolish to try to pick it. The one thing I would say is make sure you're not short, because that's an unknown risk. We're in territory. You look at the charts, the gold has never been here before. So we don't know what's going to happen. So really,
it's a new frontier.
It is. Look, some of the people who really advise the big investors, the big banks, for example, they would always, over the years, they've said, 5% in gold, 10% in gold. Some of them didn't like gold, but now it's quite common to get your investment banker telling you that your portfolio should be maybe 60% equities, 20% bonds, 20% precious metals.
Well, this is what's interesting to me, and that's kind of why I look at this, and it's kind of hard. I mean, I'm making notes, things I want to ask you, things that I want to bring up. It's kind of hard to know where to go because this is uncharted, and the only thing I'm thinking is institutional investors are clearly bullish. Retail investors are clearly, okay, this is interesting. Bullish, exactly. So that 20% figure that you've just mentioned there entirely makes sense.
does make sense, but in aggregate, when you look at the big money,
Yeah.
it's never been 20%. Never.
Hence the frontier. I mean,
Exactly.
yeah,
It really is. And so I think in the long term, this just validates. Actually, you know what I really believe? This validates my career. That, finally, after 45 years,
Yeah.
I've gone from the back page to the front page. And so it's good for me, but honestly, it's good for everyone. You know the biggest winner in this?
Tell me.
The US. Because guess what? As a central bank, they own more gold than any other central bank in the world. And their gold has never been valued at anything other than $35 per ounce, which was the original gold standard, since the 1930s,
Yeah.
$35 an ounce. Now, it's $35 versus 4,335. So that if they wanted to revalue and mark to market, that probably wipes out the US debt. So this is they are a major winner. Mr. President Trump is a major winner because the debt, if you actually did say gold, mark to market, current prices, which most central banks do, then that would transform the picture for the dollar.
It gives you a new perspective on the gold foiling that we see in the White House, in the Oval Office these days as well. But he's clearly a friend of gold and loves his gold.
He is, and even if it wasn't meant to be, I think the uncertainty that comes with President Trump is actually good for gold, because gold flourishes in uncertain times, either geopolitically or geoeconomically.
The safe haven demand.
There's a new word that I didn't use ever before, geoeconomically. We talk about geopolitics, but
you're
now
the first
we're
person
talking geoeconomics.
First person that's used that in this studio.
Yeah, I've never heard it before. I actually think I heard it from our good old friend Richard Dean. He mentioned it once. Because he would have done.
It would be a rich phrase. Absolutely right.
But it is front page. Gold, it's now front page. One of the dangers we have is that it is front page. And when I worked in New York twice, actually, Tim, it was often said that if the taxi driver talks about an asset class, it's over.
Yeah.
Well, we're getting taxi drivers here talking about gold. As soon as they say, so what do you do? I say, I do gold. Oh, yeah, gold's going up. Yeah.
Well, this is the thing. As soon as somebody remarks that something's cool, it's no longer cool, and that applies it just applies across life, doesn't it? Let's face it.
Yeah.
But that's a very good point. It's funny that came up yesterday. I was having a personal finance conversation yesterday. As soon as you have an asset class that's worth investing in, and you're in the taxi, and that's the conversation, that asset class is gone. I suppose. But conversely, if taxi drivers, and I don't mean to pick on taxi drivers, I'm not. It's a general conversation, dinner party conversation almost, water cooler conversation. But gold is bucking that trend at the moment.
It is. It's really so, because the dollar isn't really weak. It's not.
Well, I asked you this last week. A little bit, but not.
No, not really.
Yeah, okay.
Bonds, 10-year treasuries are not really moving. Equities are relatively strong.
Yeah.
I think what it is, people are coming out of cash into asset classes because the interest rate you're going to be earning over the next 2 years will get lower and lower and lower, because there's no doubt that President Trump has got in his head that US dollar interest rates should be 2%. And I'm sure I've seen that written somewhere, but I believe that's the number, because we talk about inflation, 2%, interest rates 2%, then everything is marking time. So I do think we're in for 2 years of low interest rates, and therefore it's often said that gold is not a yielding asset. It doesn't give you interest. Supposedly, it doesn't give you interest, which is a whole new story, of course, because there are many developments in the gold market where you can actually earn a yield from your physical gold. But I say more of that on another show.
That's another story, isn't it?
That's another story.
Let me just kind of sum this up. And this is, again, this is not really a conclusion, but it's a note from analysts at Pepperstone, which is a brokerage firm that I read yesterday. A short-term pullback would appear healthy, but the broader trend remains firmly upward. Now, I read that and I thought...
Completely agree. I completely agree.
Seems sound.
It is sound. I believe that we would benefit, the gold market would benefit from a retracement to a number, what I believe 3,600 would be a very, very good number to retrace to.
Right.
But the bull market will still be very much intact, because don't forget, we ended last year around 2,600. So if we, ease back, and we're only $1,000 up on the year, that is a very strong business. That's a very strong market. So let's not lose where we've come from.
Yeah.
Right. And also going back, it wasn't that long ago, 2016, gold was $1,100 per ounce.
Yep.
It's not long ago. It's less than 9 years ago. And we've come a long way very quickly, and it's too quickly.
Yep.
Just for those technical people who are listening to this, the relative strength indicator, 30-day relative strength indicator, it's a measure of overbought or oversold. Mm-hmm. And the two parameters to watch are 70 and 30. 70 on the upside, 30 on the downside. At the moment, the 30-day RSI for gold is 82. 80. Tim, I've barely seen it above 70.
That's in the red, isn't it?
That is
way in the red.
That is when you get into the point where your engine actually blows up. so yeah, I think we need that pullback to make things a lot more. It will make the rally sustainable. If we keep going at this rate, it could implode, actually. It could explode or implode. It could definitely have some dramatic impact. And also, don't forget, this is Dubai City of Gold. 50% of global demand for gold is from the jewelry sector.
Yep.
Now, the jewelry sector with gold at this level, it has problems. Because it has problems on funding, because if you're a jeweler and you borrow $10 million worth of dollars and put it into gold, and now we're up 65%,
sure.
Then your $10 million of financing only gives you $3,500 worth of gold.
Yep. Yep.
So I think we need this correction. It will be healthy, and then we're talking $5,000 plus.
Well, my kind of alter ego on this side is that was my exact question. When do we see $5,000?
Look, if we get a correction,
yep,
we could get $5,000 without a correction, but then it would collapse.
Yeah, okay.
So what I hope for is correction 3,600, and then as we head into 2026 and beyond, certainly the 2 years beyond, because I don't think we can think beyond the Trump presidency, because the Trump presidency is one thing. No Trump in the White House is something completely different.
For sure.
So therefore, my outlook is for the next 2 years, and yeah, a good, nice correction, strong rally as we go into Q1 2026.
Okay, so two and a half year timeline. So just a reminder, spot gold trading at the moment. I know you've got your screen there, and you're far more up to date with this than I am. But it was around the 4,380.
It's just off a bit at the moment. 4,373. The high today 4,380. Currently 4,373. But even in the last 3 or 4 hours, we did see gold $100 an ounce lower
You mentioned that, and you've seen that this week. There's almost a trend.
Yeah, every
there,
day we see $100 sell-off, and then it comes straight back up. It's like, it's like when you see someone being knocked down in the ring, and they just get straight back up.
Yeah.
And this is what's happened with gold at the moment. It gets knocked down $100 an ounce. Tim, that's a lot of dollars, and that's a big move. And almost every day we see it, but by the end of the day, it's higher.
Well, talk me through the thought process there. Is that, I don't know, is that brokers going for a cup of coffee? Is that, what is it?
I'll tell you what happens.
Go on.
You get a big player come in and take some profit.
Right.
And everyone will back away from that and go, oh no, this is the correction. Here it comes. Right. Let's get out of the way, or let's sell a bit.
Right.
Then almost that same person, because there are people in this market who play on the nerves of traders. And so that same guy who's come in and sold a bit of gold, who's a big player, might then come back in $100 lower and have it back. I mean, this is what I did, Tim, for 25 years.
Well, that's why I asked, because you have this insight into what goes on behind the desk.
It's called trading.
Yeah.
What we did.
But it's very easy to just think, oh, it's just a market, but it is full of people acting.
I tell you something about precious metals generally, but gold particularly. It's such a deep and diverse subject as an asset class. It's not just, it goes into jewelry, that's it. But because it's a monetary metal, it really does have all the aspects. Gold does have an interest rate. It might be low, but it does have an interest rate. Yeah. Gold is money. Anywhere you go in the world, gold is money.
Sure.
So it is a monetary asset, and that's what makes it so interesting. You can do options, you can do repos, sell and buy. You can do all sorts of things. You can pledge your gold. What would be good is actually take your gold, right, and pledge it as a deposit against the property. Ah, that's a smart idea.
That's an interesting idea.
Yeah. So you actually buy your gold, place it with a mortgage lender, the gold, and people will lend you money against that gold. So what have you got? You've got a physical asset, which is your property, which is in part funded by a physical asset, which is your gold. And that gold plus property is exactly the mentality in the Middle East. If you talk to any locals here around the GCC, there are 2 or 3 because of oil, but the 2 big investment focuses are gold and property. And if you fund your property with your gold, that's just it's a cool idea.
I knew there was a reason why we invite you to join us, Jeff. It's the ideas. I want to quickly ask you, we've got about a minute, just your other favourite, silver.
Silver, yeah. Record, I feel so vindicated now that I never paid the all-time high of $55 back in the day in 1980. So we've had a series of record highs this week. Just shy of 55 actually was the high. Okay. I believe $60 is just around the corner. After $60, who knows? But silver, there is no silver in the world. Can you imagine in London, which has been the home for bullion, it's bereft of silver.
Okay.
Yeah, it's gone. The silver lease rate, if you need to borrow silver, is 30%. 30% per annum. Right, I've never seen anything like it, Tim. So all of that silver that's been in London for all these years has suddenly disappeared.
Once again, it's a case of what's going on, isn't it? And there's kind of a sense of wonder.
Really. Tim, at the end of the day, I was always told this by the chap who taught me how to do bullion.
Yeah.
I said, what causes gold to go up or down? And he said, more buyers than sellers, or more sellers than buyers, and that's it.